Alrighty, I think we should be recording here, guys. So let's get started with our option class for tonight. It is October 21st. Um, let's go ahead and start talking about what's going on. At this time in our program, we are in management mode. Um, we've been killing it, as you guys know, throughout the entire basic options program. We had a couple positions here. We finally came into management mode. They didn't work out as well as we thought. They didn't just magically just go right to our targets and trade very nicely right out of the gate. So now we went into management mode, and we're going to go over what we did last week a little bit. We're going to talk about some stuff because we actually took profits today. I sent out the request last night on three of our positions: United States Steel Corp, Pandora, and the SPY. We sent out alerts last night, and we actually took profits this morning. And we got into them positions last Tuesday, actually Wednesday. So Wednesday, Thursday, Friday, and then out on Monday morning. So 3 days we were in them positions. Actually, four. Sorry, Monday. So in the positions for 4 days and took very, very nice profits out of them. Them did go versus basically perfect. So we'll go over and we'll cover all of them. We also have a USO trade on, an FXI trade on. So we'll we'll go ahead and cover all them. We'll cover all them positions and see whether or not we want to, continue just trading down the exact same path that we're going down, or if there's something we can do to maybe tweak them as well. And tonight we're going to go ahead and we're going to continue managing these positions. Only this time we're going to manage a little differently, and we'll cover all that as we move forward. Okay. Is there any questions right now? Are there any questions right now for us, guys? Anything you guys have before we get started? Maybe something we can cover before we get started? John, I will try and talk a little bit about them spreads as we are placing our positions this evening. Okay? We'll talk about them spreads as we get started this evening. Okay? All right, here, guys. Let's go ahead and start off with the positions, the longer-term positions that we're already in, and see what we need to do moving forward. We still got a lot of time left on them, so we got a lot of time left on them positions. But nonetheless, we still want to go over them and cover them in detail and talk about what we're going to do moving forward here. So, the first one, if you will look up here, you see we have a position on in FXI. We actually have a bull put spread on, so we're wanting the market to go higher. And we sold the 37s. We bought the 35s for protection. We bought the 35s for protections. They expired in November, so we got plenty of time left, and we took a 43-cent credit on that particular instrument. So that would leave our break even somewhere around the mid 36, just say 36 half. Obviously, it's not 36 half, it's actually 36.57, but let's just look for visual purposes, 36.50 in that mid region. But let's go ahead and take a look at where we are on that position and see if there's anything that we need to do. Here we are in FXI. We are kind of just chopping here. Kind of just, we had a nice run up there, nice pullback. We actually looked at going long this position. What did we do? We sold the 36, or we sold the 37 and bought the 35s for protection. All right, good deal, Bob. All right, welcome back, Bob. Glad you can hear us. All right, we're just going over our positions right now, Bob, and then we'll look to put on our new positions, which I have already said. They're basically a continuation of the managing of the SPY, the United States Steel, and the Pandora. But we're going to cover all that because we did take profits on all of them today. And we're going to look to put on some new positions moving forward. But right now on FXI, we are in a bull put spread here. We collected 43 cents. We sold the 37s. We bought the 35s for protection. We got a break even down here. What are you guys thinking? What are you guys thinking about this? Are we going to get a continuation, a little bit of a pop back to the upside? Are we going to get some rollover here? What are we going to get in this instrument? Or should we just go and check on the price? That's usually a deciding factor. That's usually a deciding factor, right? Let's just go over here and let's just check and see. We got 31 days left. And what did I say? We sold the 37s. So we're going to buy them 37s, and we sold the 35, so we bought 35, so we sold 35. So right now, if we were to use the midpoint, which this is traded very, very tightly, guys. These are very tight. Look at this. 2 cent wide spread. So that's 1 penny. So 2 cents, midpoint would be 1 penny at the 37. The 35 is trading for 3 cents, so the midpoint would be 1.5. So you can guarantee a spread of about 2 cents. You see 30, 32. If you do 1 and 1, that equals 2. There's your spread. You could naturally buy it at 32 cents, or the midpoint, if you can get filled at the midpoint of each one, so basically 47 cents and whatever in the world the midpoint of this up here is going to be, the 35, we're talking about 17 cents. So anyways, if you were to get the midpoint, whatever, that adds up to 30 cents. 47 minus 17, 30 cents. That's your midpoint. Okay? So if you can get filled at the mid, which you can on an instrument this liquid and this tight. So right here we're looking at this position at 30 cents. What did I say we did? We collected on this position 43 cents. Right now we can buy it back for 30 cents. Well, we know we don't have to worry about the spread. We're worried about 2 cents on the spread there. If we get the midpoint, we lost 2 cents there. Does that make sense? Because you got to buy it. When you buy it for the more expensive price. Just to make this, dumb this down and make this nice and smooth. When you go to buy something, you got to spend more. When you go to sell something, you spend less. So if the midpoint here is 17 and the midpoint here is 47, does that make sense? So now you got 47 and 17. You lost a penny there. You lost a penny there. So there's minus 2 pennies just for making this position, right? So now you're at 41 cents, okay? Let's just hypothetically say this thing costs you $3 to trade. So let's say 3 more pennies off of it. Now you're down to 38. So you just made 8 cents if you were to buy this thing back at 30 cents. Okay? That is just a guesstimate, guys. Not everybody has the same commissions. Not everybody is going to get filled at the same price or do it the same way or whatever. But that's a nice generic way of looking at the math. Okay? Are we wanting 8 cents on this? Are you guys wanting to get out of this position? Are you wanting to take profits? Or do you think this thing's going to pop higher? Because if this thing can break through this resistance, there's a very good chance that this thing, if it gets to these 40s, as you see, if it gets to these 40s up here, there's a good chance this thing's going to trade for around 15, 20 cents. Just at 40, let alone if it goes higher. Okay? What are you guys thinking about this instrument? Are you guys still comfortable with holding this? Or, let's just throw this out there, do you think it can at least stay above this line for the next week or two? Because you'll make money that way too. Just for the market stand sideways. What are you guys thinking about this position? Do we leave it on? Do we wait for it to pop up and give it one more little pop to the upside? Or do we just say, you know what? Let's take our $80 and let's go ahead and look at the next position. What do we feel about this, guys? How do we feel about this position? How do we feel about this, guys? We think it's going to push to the upside? I'm just kind of taking in this like a poll here. You're welcome. John was asking for some math earlier. I'm going to continue to do that. But to explain the math and what prices you're actually going to be paying for and how much it actually costs and what kind of money you're actually going to make on this, it is very important for you to know that. And we'll cover it in more detail. I'm getting a whole lot more votes for letting this thing go. Let's go ahead and continue to hold this thing. Continue to look to see if it pops. I'm getting a lot of confident traders in here, so that's fine with me, guys. I am one to, I will ride it out with you. I'll continue to hold. Let's just look at the numbers here. Look at the numbers here. The 37, our break even, let's just say 36.5. What is the likelihood of this thing to close at or above our break even? Here we are, 36.5. Let's go over here. 75.6%. You guys like that? Do you like them odds? So we got 31 days. It's telling us right now by the mathematical formula, the ratio of the bids and the ask and the calls and the puts that are traded on this instrument, it's saying that we have a 75% probability of success on this position of expiring out of the money. You like that? So we'll give her a ride. We'll continue to hold this. I think that's what the unanimous vote. Nobody voted even to get out of this position. So after we did all of our math, taking commissions, taking the spread, taking everything out of it, we're saying, hey, we're up 8 cents on this position. We don't want 8 cents. We want 25 cents. I don't know. I'm just throwing a number out there. Okay, guys. So we are going to hold this. If we have any drastic changes and I make an executive decision in the next week, I will definitely put it I'll put it on the website. I'll put it on the option program page, and then I will send out an alert. So I'll hold it with you guys. Even if it pulls back a little bit, I'll continue to monitor down in here and see if we can see if we can get this thing to pop back to the upside here. So, all right, I'm on board, guys. I'll hold it with you, and we'll go ahead and move on here. USO is a little different story. USO is a little different story, isn't it? Here we go. We're going back into management mode here. What did we do on USO? We sold the 32 5s, and we bought the 30 5s for protection, and we collected 45 cents. I'm assuming this is trading for about $1 now, maybe $1.10. I'm not sure. I checked it earlier this morning. Based on the way the market traded today, I don't know if it went too far, but we'll see here. But so that puts us right around here for our break even. So we're underwater a little bit. Do we see this thing retracing back up to its mean, getting a little bit of a pullback and a test back up here a little bit higher? Do we see that doing this, guys? Pulling back up, or do we see it going ahead and rolling over from here? It's a really, really tough question, and it's really become kind of a stinker for us. What are you guys thinking? The one good thing is we're getting a rollover here of the of volatility, IV. So it will make it cheaper. So if this thing can get a pop while this is dropping, we'll get the cheaper option prices, and we'll get the price to go up like we wanted to. Should make us profitable a little quicker than if this thing were to continue pushing higher. But what do we got here, guys? Okay. I agree. I see that, John. Anybody else? Okay, starting to get some feedback here. Let me read through some of these guys. Reversion to the mean. I like your thinking there, because I really believe in that too. If we can get above that containment ship. Okay, all right, right here. You're talking about this big candle wick here. Okay, very good. If we can get above there, we should get a nice little dollar pop. I agree. I think I agree with that. At least 50, yeah, $1 to 50 cents. Yeah, I agree. He's talking about getting above this big candle bar here, or this big wick, get another little pop if we can get above it. I completely agree. That is very likely. All right, if you guys, I'm on board. If you guys want to hold on to that as well, we have plenty of time. Remember, we are trading the Novembers. Guys. So I am completely on board. I'm not worried at all, if you can't tell. I am in no pain here. If it does go awry, $1.10. So I said $1 to $1.10. I would like for this thing to really get a pop tomorrow. But I'll watch closely, guys. We had a little pop into the close on crude. We really need to see some follow through, though. This is one I'll really follow my rules on. If this thing is not trading any higher in the next 10 days or so and next week or so, I will start to get rid of this sucker because oil has a tendency to it could really drop if it started to. So I probably won't play around with it too long, but I am on board with you, bud, and everybody else who I think is on the same page. I'll let this thing work. If we can get another $1.50 out of this thing to the upside, I think we'll really be in we'll really be in good shape here. So I'm going to go ahead and let this play out with you. I think we got a good one here as long as, there's no picking an exact bottom at all times. But if we can get some type of pop here, some type of reaction back to the upside, reversion to a mean, even if you use some Fibonacci's here, guys, you draw a fib here. Even if it can pull back to that 50%, we should be into the black. So that's all we're looking for. See if we can get that punch back to the upside there, and then we'll look to take profits and not to get too greedy and think that it's going to go to the moon or anything. But if we can get a pop up there, that could really help us out. And then maybe we'll actually reverse our position. To be honest with you, we might go from straight taking profits to rolling this sucker over if we can get it back up towards this 30-period moving average, maybe back up towards these 33s. So that's my analysis on the crude oil. So I am looking for a short-term pop here. I'm not looking for a big rally. I'm just literally looking for a week-long pop here, and we'll be happy. Okay? I think we're all on the same page there. So no touching the oil either. Now, let's go and let's start talking about what we've done this last week. I'm going to start with X. I'm going to start with United States Steel. Guys, we had a trade where we put on up here, and it just sucked. Sold off. We got the heck out of it. We lost money. Now I'm in management mode. Now we're in management mode. It sold off here. We got rid of it last Tuesday. So if you go back, here's Tuesday, Monday, Friday, Thursday, Wednesday, Tuesday. So on this day right here, this day right there, we placed an order on this United States Steel. We placed an order to go ahead and look to take advantage of these weeklies until we can fight back into this position. Okay? So what we did was we ended up placing a new position. We sold the 32 halves, and we bought the 30s. Now with that, we collected 37 cents. Okay? So we did not expect this thing to drop any more. We were thinking this thing had exhausted itself. It had came right down to where the gap started, also to the most recent swing high. We had really good support in here. We were looking for this thing to bounce, hence why we sold the 32 halves. 32 halves is up here. So the 32 halves was at the money almost. Well, it was at the money at the time. And then we sold the next strike, what made sense, that had the best spread down below. So we end up selling it for 37 cents credit to us, and we did the weeklies, the October 4s, okay? Not the monthly, the weeklies. So what did we do today? We ended up buying this thing back for 10 cents, collecting 27 cents on it, profit. So it ended up turning out to be a wonderful week-long trade here for some of you. Now what are we doing? I'm going to do the same thing I just did the opposite way. Now, some of you might cringe here or might not agree with me, but I think that this thing is not necessarily just falling and then tanking right back to the upside. I think if it does go to the upside, that's fine, but I don't think it's going to do some V-bottom and head back to the upside. I just do not see that happening. I'm going to use my technical analysis to my advantage, and I'm going to say, this thing had a nice push to the upside, got overhyped with a couple different gap ups, and it had a very, very nice sideways movement down here. So something made this thing spark to the upside, hyped this dude to the upside, and then sure enough, I feel like it wants to revert right back down into where it was normally trading. This is just overpushed hype. So with all that, what am I going to do? Well, I want to keep on trading these weeklies because I'm not looking for some guarantee that this thing is going to magically roll. I'm going to go ahead and play very conservatively. I'm going to give it some more room. So if it wants to trade a little bit higher, it can. I want to give it a little bit more room, but I want to sell the 38 and buy the 40 to protect myself. Okay? I'm going to sell that 38 and buy the 40 to protect myself. Okay? This gives this thing plenty of room to pop on up. Gives it plenty of room to pop on up here. Okay? Yeah, right? Okay. So, okay. Any questions about this, guys? Any questions about this? We are seeing the IV roll over. That's fine. Let it keep on rolling. It could get another little rise here, or at least flatten out if we do get a rollover here. But I just, from a technical standpoint, this thing, what hyped this thing up is obviously not going to continue. So we had a nice anchor to the downside, nice drop, getting a pullback, and I do see this thing possibly rolling over. So I am looking to trade to the downside here. Any questions on this, guys? What are you guys thinking about this? I'm going to trade the weeklies. I'm going to look to sell. Yeah. What are you guys thinking? Any feedback on this, guys? It'll be the call side. So if you look here, here's another good analysis here of price. Looky here. At the 38s, we got 10 cents wide. So that means 5 cents is going to be our midpoint. So there's 5 cents difference there. Okay. Then down at the 40s, we got 7 cents. So there's 3 cents difference. So there's an 8-cent spread that we got to deal with. So we want to make sure that we collect enough that it makes sense for us to be able to take this position. Okay. So I'm looking to sell the 38. And I want to buy the 40s to protect myself. And we're looking at 48 cents as the mid. Do I think we can get filled there? Yeah, I think we can get a little bit of a pop-up tomorrow in this instrument, fill us, and then see it roll back over possibly in the next couple of days. Does that make sense, guys? 48 cents. I'm trying to get greedy on it. I don't want to, put it at the mid because it's just not enough money for me. 48 cents, guys. And that gives me about a 71, just over 70% probability of success. Does that meet our parameters? I'm getting lots of thumbs up and some good. All right, so we're all on the same page, guys. We're going to sell 38 calls this time. You guys interested in what's going on here? You guys enjoying these different positions? We've been very active in, trading. We've been very active in trading the monthlies here over the first 12 weeks of this program. Now we're resorting to trading some weeklies to get ourselves some of our money that we are been allocated to the markets. A little bit quicker positions while we still have longer term positions on. If we didn't have them longer term positions on, I would be looking to place some. Okay? I'm just writing out some of our stuff here. All right, guys. What do I have here? I have a new position here. We're going to sell the 38 calls and buy the 40 calls. Yeah, Henry, I knew you did. I saw your comment last week. I knew you did. But they're a little bit, they don't have enough time to work out. So you got to get the market to really move in your direction, or at least stay right where you're at throughout that week. So it doesn't allow you as much room to play as the longer term, but you can get a pretty good bang for them. But anyways, so we're going to collect 48 cents, and we're going to place a day order. I'm going to lock that position in, and we're doing the October 5s. Okay? So we got 10 days here on this position. That's what we're going to do on these three positions tonight. We're going to place this October 5s. Okay? So we got that down there underneath the United States Steel, guys. Okay? Right. Now let's go on up. We're going to do Pandora and spiders now. We're going to take care of our Pandora and our spiders now. If we go over to the tab here, let's do Pandora first. What do you guys see here on Pandora? How do you guys feel about the chart of Pandora? Are you bullish, bearish, indifferent? What are we thinking about the chart of Pandora here? Just getting some feedback here, guys. Just collecting some feedback. Short-term bear, 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 sideways, bear, sideways to bear, down. I haven't had one bullish person yet. If anybody wants to chime in for the bulls, you can. Okay. Enough said for me. What do I see here? Price is at 23 bucks. Right now we're trading at 23 bucks. I am a little bit bearish here. We've had our pop. Now I'm looking for this thing to roll over. Look at the past here, guys. Look at this pop. We just went from, let's just say, just under 20 to 23, a $3 pop. What's this last pop? 24 to 28, $4 pop. The last pop here, the biggest one yet, 24. There's a $5 pop. So $5, $4, $3. Here's this pop, 20, just over $2, $3, $3, $3, $3, $4. All right, you're not enough said, right? $3, $2. Enough said. So with that being said, and not to mention, we are at some resistance. So with that being said, I am also going to place a position, but I am going to put it up a little bit higher. I think I'm going to do the 24.26, 24.26 on this position. Okay. That's funny comments, guys. Got some funny comments. Very good. But anyways, so anytime that we're in a downtrend, look at this. Uptrends, you get bigger pushes. Uptrends, you get bigger pushes. But anytime that you're in a downtrend, you get these little pops back to the upside before it actually rolls over. That's what we're dealing with here. Okay? That's what I see right here. Now, we may be wrong. We may be right. Who knows? But I'm just playing what we're seeing, and that's what I see as of right now. So I'm going to go ahead and look to do this Pandora position. Let me go out here. We're just doing the weeklies. We're looking for the next week. I'd like to see this thing roll over. So if we look here, what makes sense? Here at the 24, I see a 8 cents wide. So there's 4-cent spread. Up here is a little bit wider. That's more of a 10-cent spread. We go to the 24, there's a 7, there's a 3 cents. 25 is 3 cents. We go down here to the 26s, it's 5-cent wide. So there is, let's just do 2 cents. So what we're dealing with here is we have 4 cents plus 2 cents, 6 cents for us to put on this 24.26. I'm doing the mid because we're trying to get filled at the mid. Now you can do the math however you want. I'm just simplifying this down, trying to get in some of the math here, guys. So let's go ahead and look to sell the 24s. Let's buy the 23s to protect ourselves. That's wrong. Buy the 26s to protect ourselves. Ooh, 50 cents. Let's see about that. 50 cents. What do we do with the 24.25s? What's that going to give us? 30 cents. That's a lot better deal. That's a lot better deal, guys. Let me see here. What's the 24 halves at? 24 halves trading at 7, so that's good. By 26 half, that's not good. Let me do the 24 halves by 26. 34. That's not necessarily good either. I think I'm still going to stick to the 24.26, guys. 50 cents. It's not massive, but you know what? It's going to be good enough for us, especially if it works out. It's going to give us another 12 cents on top of what the $1 wide would have given us. So, all right, I'm going to go ahead and do this order, okay? So what I'm going to do is I'm going to do the 24, and I'm going to do the 24, and I'm going to buy the 26 to protect myself in case something goes awry here. So let's go ahead and put on a new position. I'm going to do open October 5 position. And I'm going to sell, right? Yeah, I'm going to sell the 24 calls. And I'm going to buy the 26 calls. Does that make sense to everybody why we did this and not the other order? I want to make sure that this is all explained thoroughly. This is the next stage of our kind of our training in here, is to understand pricing of the options. Understand pricing. Does everybody get why we did this? Why it made more sense to collect more? Our spread alone, we're giving up 6 cents. Okay, so our spread alone here, because of the spread, we're giving up 6 cents. Now, if you throw commissions on top of it, let's just say 9 cents. I'm just doing a hypothetical. So we're throwing on 9 cents. We can do the 24.26 and collect 50 cents, give up 9 cents total, 41 before we ever leave the gate. 41 cents before we ever start trading. Okay, this is our beginning point. Or if we did the other, we're looking at, let me just change this down here. Let's just make it simple. We're going to collect 30 cents, which makes more sense because you get more money. But the 25s, trading at 3 cents and 26 at 4 cents, there's 7 cents. There's more right out of the gate just in spread. Plus that, so let's make it 10 cents. So now you start off with 30. Now you're down to 20 after your 10 cents, after you do the spread and your commissions. So now you're starting off at 20 cents here, okay? You're starting off with 20 cents versus 41 cents. And not to mention, you have a 10, 12 cent difference in break even, okay? So I think this is a clear winner on this one, especially since we are very bearish on this position. We have more protection, and plus we have a better likelihood of it expiring out of the money. Okay? Does that make sense, guys? I want to be very thorough. We're starting to, the next few weeks, we're going to cover pricing quite a bit. We're going to cover pricing here. Okay? The reason I went with the other was simply because the spreads are going to give us closer pricing at this point. So A, we got a bonus there. B, we're collecting a whole lot more on it. And C, we're going to have a bigger probability of success. Okay, we're taking on a little more risk. We're taking on another $1 of risk, So you guys got to understand that there's always a give and take. This isn't like some magic, but there's always a give and take. But let me look up here. I am very confident in watching this thing trade below this level in a week. Okay? If we break above here, we're going to lose. If we're going to hold these highs anywhere down below here, we're going to profit in a week. Okay? Okay. Any questions there, guys? I like that position. Let me pull this over. What did I do there? I went ahead and filled it out here for us. We got an October. I'm going to continue to put it down below the original Pandoras. You see here, we got filled for the last position. We got filled for a 29-cent profit. That was this morning. I filled all this out here this morning. Last week, we actually took a $1.50 widespread, and we collected 54 cents. Okay, we collected 54 cents, which was awesome, amazing. Bought it back for 25 cents this morning. So collected 29 cents on that sucker. That was an awesome trade for 4 days. Now, what are we doing? Not quite getting as much money, a little more risk, but we still like the position here, simply because the market's in a downtrend. So we're going with the trend. We're not going to get as good of a deal. We actually went against the trend. So that's the reason we got more money, because we, theoretically the prices we're selling off, things are a little more expensive to try getting it to bounce. Okay, because the odds aren't necessarily in your favor as much. But we did get it to work out really well there. And now we're actually looking for this thing to roll over. So we're going to collect a little bit less, but yet I still think that our odds are very, very great here. So the next position is going to be this spider. I'm going to cover in thorough detail here in a second, but let's go ahead, and we're already talking about what we took profits on today. So we took profits on X. We bought it back at 10 cents today. We bought that back for 10 cents today, which equaled our net 27 cents profitable. For any of you, I've gotten all the emails today, guys, so thank you for the nice words. And let's just stick our nose in the grind. Let's keep on moving forward, because we got a lot of work to get out of this little that pullback that we were actually bullish on. 31 cents there, and what was the Pandora position? Is that what we just went over? Yeah, that was 29 cents. All this happened in a week, guys, and all this happened just now. So if you guys looking at weeklies for the first time, yes, they're very, very nice. But they can also go the other way. They're bringing on a little more risk, but we also had to have the market move. For us, great deal. We had the markets move perfectly for us. We collected a ton of money here. So now let's go ahead and look. We're actually reverting all of these back to the other direction here. So let's just go ahead and see if we can get these next positions to work out. But that's what we did. That's what we collected on today. Longer term, and now we're looking to put all these back on. Longer term, we have USO to the long side, and we have FXI to the long side. So right now we're currently long these positions, and now we're getting ready to be short all these positions. Okay? These down here got a lot of time still to work. These are going to be weeklies. So we're kind of averaging out our deltas here, guys. We're averaging out our deltas. That's something for us down the road to start talking about as well, is more portfolio management and getting a little bit more delta neutral. If you're very positive delta, means you want the SP. If you weight it against the SPY, means you want the spiders to go up. So if you want the spiders to go up and you have a really strong portfolio delta, you're in good shape, and the market goes up. But if the market goes down and you're strong portfolio delta, you're not in good shape. If you're more of a neutral delta, then as the market oscillates, your different positions are going to be profitable, negative. It's just a more conservative way. You're not going to make a bunch of money. You're not going to lose a bunch of money. It's more of a management. you're managing money. You're not necessarily looking for income. So that's for down the road too. That's just something if you guys wanted some notes to go ahead and maybe Google search something or look something up tonight. Talking about getting a little more delta neutral on our positions here. That's what we're working on right now. So, okay, let's go ahead and look at the what are we doing? We're looking at spiders now. So let's look at spiders. Let's look at the spiders here. What do we see? Do we think this thing is heading to the moon, guys? Do we think this thing's heading to the moon? Think we're going to have a little bit of a pullback? Or think we're going to have a big pullback? Think we're going to grind sideways? What are we thinking here, guys? I want to get the groups analysis. I want to see what other people are thinking about this instrument. What are other people thinking about this instrument? Are they really, John? I didn't look into that. I might actually squash Pandora here in a second, guys. But go ahead. What do you guys think about? What do you guys think about the? What do you guys think about SPY? Do. End of Oct is bullish historically. Okay. I'm talking about this next 4 days. What do you think Pandora is going to do in the next 4 days, guys? October 23rd. Okay, John. Guys, I may squash this Pandora trade. I may squash this Pandora trade. Actually, I am going to squash this Pandora trade. Sorry for doing that. But we do have earnings out in 2 days. Okay, guys? I would hate to do this, okay? I'm going to squash the Pandora trade, guys. I'm still going to put on the spiders, but I am going to squash Pandora. Thank you, John. You either cost us money or made us money. Everybody can thank John. But I am not going to go ahead and put my money on the line here for this particular instrument. Darn it. You can tell I didn't do a bunch of homework on it. Yeah, right? But no. Yeah, right, John? But guys, it's just as easy as this. I'm going to go in, I'm going to cancel my order, and I'm also going to go ahead and I'm going to delete this right here and see how it comes out. If it turns out to be positive and good for us, maybe we can put on a new position after the earnings come out. I still plan on trading Pandora as soon as these earnings come out, but I need to sit out a week here. I might need to sit out a week here on Pandora. So just as easy as I just did that, I'm going to delete that, and I'm also going to go into my platform and delete the trade. But I am not going to go ahead and put on Pandora. So thank Johns for your missed opportunity or your savior. But let's go ahead and look at the spiders. I am not looking for this spider to go to the moon right now. It is extremely rare for this thing to push and never stop. This thing has rolled over here. I'm curious if we can at least have a little pause. At least a pause to retest back down at these 90s. Okay? I am looking for a little bit of a pause here. This thing may want to go to the moon, but I am looking for a little bit of a pause here on the spiders. Okay? So I am going to look to sell these 196s, buy the 198s for protection, and look for this thing for the next 4 days. If this thing just kind of trickles here, then you're going to see me come right back and look at long positions here. But as of right now, I am going to go ahead and for the next 4 days to 7 days, I'm going to look for these spiders to pull on back here. So I'm going to go out here. You're going to see the 196, 197. See 196, 198. Actually very good on the spreads here at 198. Absolutely wonderful on the 198 spreads. So I'm going to go ahead and look here at selling the 96s. I'm going to buy the 98s for protection. And this is going to be a nice opportunity for us. So we're looking to sell the 196, buy the 198, and collect 65 cents on this position. I'm going to go for the mid. Now let's do our math here. On the 96s, we're doing 102 by 97, so we're looking at 5 cents. So let's just call it 2 cents. We're always giving ourselves the slip here. And then the 98s is 33 by 36, so we're looking at a penny. So we got 3 cents here of, trading in the mid, because we're looking to place this order at the mid, right? We're at the mid, not at the natural. If the natural would be, all right, if we were to buy it here, if we're buying the 198, we're going to do the 37 cents, and we're selling over here at the 97. So that would add up to the, so we'd sell the 97 cents, and we'd buy the 36 cents equals 61 cents. So we're not looking at the natural. We're actually going to give ourselves a little bit of boost here. Look for the 65s. So with that, we have a 3 cents by trading at the midpoint. 3 cents we got to give up here. So 65 minus 3 commission. So now we're looking at 59 cents before we ever start this position. This is where we're starting. So for you doing your math, this is technically where we're starting. We got to pay commissions. We got to do the difference in the spread. Now we're talking at 59 cents. If you want to be completely realistic and honest with yourself. So when you buy this thing back for, 30 cents, we're actually going to make 29 cents, not necessarily 35 cents. Okay? Which is actually, this is very good. This here, 6 cents is incredible, which you're going to get on the spiders. Does this make sense, everybody? I want to be really, really, really clear here, because this is a big part of what we're trying to cover in the next couple weeks. John, I know you sent me an email earlier. Is this starting to add up a little bit? You're a smart guy. I know you're going to get it pretty quickly. Yes? Okay. Very good. I'm just filling in the order here on the website. Guys, these are always day orders. I need to tell you guys that all the time. These are day orders. We're going to buy the, what are we buying? We're buying the 196s. No, we're buying the 198s to protect ourselves. Yes, it's they're always trying to trick you. That's how these bid and ask work. You think that, hey, you're getting some awesome fills and some awesome trades, and hey, look at all this money I'm making, but yet you're like, where in the world my money go? Well, that's because people don't quite understand, the math behind some of these things. So we're going to keep on covering the math here over the next couple of weeks and get us all on the same page here. But what I've written down here, guys, what I'm going to go ahead and do here is I'm going to cancel. I haven't gone to the platform yet and cancel. I got to cancel the Pandora position. But up here, you see I did squash the Pandora position. I erased it up here. So after the the numbers come out, we're going to go ahead and revisit it next week. And I am looking to go ahead and continue with Pandora moving forward. But I have to squash it with the numbers coming out in two days. So I do not want to get us jostling around there and flip of a coin whether or not we're going to be right or not. So I'm not looking to do that, especially with us trading the weeklies here. So it would take a lot of management to undo a mistake there. So let's go ahead and look here. What we have here is the October 5s. And what we're going to do is we're going to sell the 96s, buy back the 98s calls for 65 cents. That's actually a very, very good order. 65 cents. We'll take that. And let's go and look at the chart here. Or no, I want to look at the, I'm going to continue looking here. So 65 cents. So that would mean that the just over the 196 196.65 break even, so let's call 197 right here. Looking at 75% probability of expiring out of the money. That's the range we're looking for. That's exactly the range we're looking for. So we're in a great position. We're in a very strong position here. All we need is just a few days for this market to drop or even trade sideways because we don't have a big spread we have to deal with. One day of time decay will deal with our spread. One day of time decay will take care of our commissions, and then we can start getting profitable. So that's with the market going absolutely nowhere here on Spiders. If it falls in the next couple days, then we're talking about some opportunity there. October 5. That's what I have up there, right? That's what I have. October 5s. Weeklies. Yeah, October 5, guys. So we got 10 days left until this thing expires. I have complete intent to have this thing taken care of within the next 4 to 7 days. Oh, I made a mistake there. Thank you for catching me. I wrote it up there, but didn't write it right down there. All right. So look at the chart here. What are we looking to do? We've had a crazy run up here, guys. I mean, just a crazy run up here. I'm looking for a little bit of exhaustion, a little bit of a pullback. If it doesn't happen, it doesn't happen. But if it does, and you know how we intend on it to happen, we should have another nice little week here. So, are there any questions here, guys? More importantly, my goal tonight was not just to get these positions on, but to go over some of the pricing, some of the stuff, how things are actually priced, and what you're really, what's it costing you, or what are you receiving as you're getting into the position. It's not all bells and whistles. It's not as easy as it may sound, because if you're looking to take a position and all of a sudden you have, let's just say, I don't care what you're trading. Let's just say you're trading, X, Y, Z. Okay, that is a Z, I promise. Anyways, so let's say you collected 20 cents on this. You're like, all right, I'm only doing a dollar wide spread. So you do the, say you sell the tens and you buy the nines. But at the 10, you have, let's say, a 14-cent wide. So that's 7 cents if you trade the mid. And then let's say at the 9 cents, this is not a real liquid instrument, okay? Let's say that say there's 14 cents wide here, so that's 7 cents at the mid. Say you get filled at the mid, okay? Now you just took 14 cents off. Remember, the midpoint, you have two sides, right? So you're losing 7 cents there. You're losing half of it each time. So there you just lost 14 cents. You're starting with 6 cents plus your commission before you ever get started. That is awful. Now, this is an extreme example here. This is not going to really happen. There are instruments out here like this. This is extreme. But people look at their thing and they say, man, this thing went in my direction and I'm losing money. The first day out, they're like, man, this thing, I got 5 days left to expiration. It's went in my direction and I have not made money on this yet. They haven't quite grasped the math behind it. Now, this is a ridiculous example here, not right? This is not something that's going to happen, but this is, kind of a situation that people kind of put themselves in sometimes, and they don't quite understand why they're not making money. When you have illiquid instruments like that, let's just say XY, man, I cannot write right now, XYZ instrument, a lot of times if you have them big spreads, you can't really do too much of them big spreads there. You can't do spreads on the trading strategies on them positions because it costs you too much. So that's when you just buy a call or buy a put. And you try to do it at the mid and see it go. So you're looking for them to get nice big jumps, not necessarily just kind of oscillate. So watch what kind of instrument you're trading. Make sure you pay attention to the math. Make sure it all looks good to you. And then just continue, guys. Are there any questions here? Any questions, guys? I've uploaded it all to the site. We'll get the video uploaded to the site. We've taken a position. We pulled back on Pandora. I want to make sure everybody understands that. Pulled back on Pandora. Thanks to Johnny Boy. But any questions here? Good deal? All right. So we're making progress. All right. Good deal. Any questions here, guys? If there's no more questions, I'm going to wrap this up. Get this video uploaded. It takes time. Get it all on the site and get ready to send out in the morning. So it's ball game time. Yeah, sure is. They're about a half hour into it right now. But I'll still peek my head in there. But all right, guys. All right. All right, guys. You guys have a good evening, and I will see all of you guys. I'll see all of you next Tuesday night, and some of you I'll see in the live trading room first thing in the morning. You guys have a good night. Thanks for coming.